$20 billion US. That is the annual economic loss caused by weather and climate-related disasters, according to the World Bank. India alone lost $87 billion due to natural disasters and climate events in 2020, as per the World Meteorological Organization. This has put the focus on immediate need for disaster-resilient infrastructure. The latest report by Coalition for Disaster-Resilient Infrastructure has highlighted that all new infrastructure investments must also strengthen systemic resilience. Shivani Bazaz gets you the findings of this critical report.
Earthquake in Morocco, wildfires in Hawaii, Greece and Canada, landslides and floods in India. These were just a few of the natural disasters that caused death, destroyed infrastructure and disrupted supply chains in 2023 alone. Every year, the world witnesses losses to the tune of approximately $520 billion due to natural disasters. The Coalition of Disaster Resilient Infrastructure (CDRI), an international coalition of countries, UN agencies, multilateral development banks, and the private sector, has issued an urgent call for resilient infrastructure which can absorb, rebound, and adapt to hazardous events and shocks.
We're talking about something like $300 billion to $330 billion of risk in our infrastructure asset loss that we can suffer on an average in a year.
The report says that low and middle income countries are at higher risk due to ongoing construction of infrastructure. Low and middle income countries must increase both public and private investment to reduce their infrastructure deficit and strengthen resilience. Worryingly, the report suggests that most infrastructure that will be required globally by 2050 is yet to be built. CDRI says that the annual investment required to address infrastructure deficit, achieve SDGs, and strengthen resilience by 2050 amounts to $9.2 trillion, of which $2.84 trillion must be invested in low and middle income countries.
Some countries, particularly, for example, small island development states, they may have one or two infrastructure assets. I'll give you an example. One country may have only one airport. And if that airport gets impacted, that country can lose connectivity to the rest of the world, right? So we've been able to look across the globe and be able to identify which countries are more vulnerable and have less asset value to begin with.
But blind investment is not the answer.
Well, the CDRI report clearly says that more construction is exaggerating challenges in many developing countries, including India. As India continues to build more infrastructure, the recommendation is that disaster and climate risk must be considered systematically in planning, designing, regulation and management of infrastructure systems. Otherwise, we'll only be staring at increased asset loss, damage and service disruption. In New Delhi, this is Shivani Bazaz.
Time for a short break, but coming up, air conditioning and refrigeration provider Carrier is targeting sales of $22 billion in 2023 after reporting a 1% drop in 2022 compared to the year before. We take stock of the company's plans for India with Carrier's global CEO, David Gitlin, when we are back. Stay tuned.